Gold has been stuck in a range, and it's kind of rebounding on Friday today, up $11 as we speak. Peter Hugg, Global Trading Director of Kitco Metals, is back to talk about the price action and where he sees gold headed next. Peter, welcome back to the show.
Good to be here, David.
So the dollar's down a bit today. Do you think that has had any impact on gold's price?
I think gold has been mirroring the dollar, and the dollar's been strengthening at the beginning of this week on the 10-year surging. I think last Friday when we spoke, the 10-year was trading around 112, if I remember right, 112, 114. It's now at 132. So the yields in the 10-year have been going up this week, and that has moved some assets into the dollar. But this morning, as Europe was closing, the dollar took it on the chin. The euro started last Friday, was trading in close to about the 123 level, got down to 120 earlier this week, and it's now back in the mid 121s. So it seems to be consolidating at this level, but I still anticipate dollar weakness coming up.
Okay, well, let's talk about sentiment now, and I'll ask the audience first. If you're watching this on YouTube, comment down below on whether or not you think gold is going to stay flat, go up or down. What's your take over the next couple of weeks? Peter, do you think generalist investors are losing interest in the yellow metal right now?
I would imagine that that retail investors are disappointed in the price action in gold. And again, I was asked this morning again, where do you see gold next week? Are you bullish, bearish, or neutral? I mean, to be honest with you, I just don't know, because it really depends on the context that you look at the market from. And, I've been saying forever, I sound like a broken record. I mean, if you're buying precious metals as a position in your portfolio and you have a specific reason, i.e. you want to hedge against the balance of your portfolio, then you don't look at this thing every day. You're just holding metals, and as an allocation, as a percentage of your portfolio. I mean, if you're a trader, it's a totally different ballgame. I mean, right now I can tell you that my sentiment looks bullish next week. I like the fact that gold has regained the 200-day moving average from a technical perspective. I would rather be long this market as a trader as opposed to being short the market, specifically reference to gold. But on Monday, I may get something else that will change my mind in the short term, and I'll be out of the market, possibly short the market. But so it's just a totally different psychology. But from an investor's perspective, the macro picture has not changed. I mean, the Fed is going to continue easing policy. The Biden administration is going to do its best to pump up the stimulus package. The COVID situation is certainly not behind us. There's going to be more stimulus coming into the market. If you looked at the PPI numbers that came out this week, they were considerably higher than anybody expected. So there's all this pent-up demand that's sitting in the market right now. And, if we get some kind of normalization in the economy, this is going to spill over and there's going to be a ton of spending. And you just, in that scenario, it would be a hard argument to suggest that inflation is not going to accelerate. And that is, on a macro basis, extremely bullish for commodities. So again, it's a matter of patience, I guess is the best way to say it. If you're looking for a quick pop to $3,000, I don't think you're going to get it. But it's a matter of patience, and it's a matter of how you allocate your portfolio. So it really depends on who I'm speaking to here when you ask me that question.
I understand. The macro picture you were speaking of, that hasn't changed. What factors are you looking out for? Are you talking about inflation, monetary stimulus, monetary policy, the economic recovery from COVID last year? What are some of the variables that are most important to you, Peter?
Well, I mean, if you look at the other metals, if you look at the industrial metals, I mean, if you just look at the ratio basis, I mean, silver is almost at where it was when gold was trading at 2190. Gold is back some $400 from the high, and you've got silver about $1.50 away from the high, ignoring what happened a couple of weeks back when we got that little pop surge over the weekend. And if you look at platinum, it's cruising around the $1,300 level. Rhodium is north of $24,000. I mean, copper is moving substantially higher. If you look at the industrial base of metals, they're all indicating that the demand side is expected to increase, and it will also be benefited from inflation. Gold generally leads the pack, but this time it may follow the pack, but it will be pulled along with the industrial demand in the metals. So that's one part of the equation. The second part of the equation is I do believe that inflation will run hotter, considerably hotter, and that's if you use the government numbers. I mean, if you go to the grocery store, you already know it's running hotter than the 2% target the Fed has got in its window. And there's absolutely no way the Fed is going to put on the brakes on their fiscal stimulus until at least mid-2022, in my opinion. And so you have a situation where the Fed and most central banks in the world are likely to get behind the curve. And if they get behind the curve, we could have a 70s type of scenario where inflation gets out of control, and then the Fed has to react. But until they react and they start to tighten, I just think you have to be constructive the metals. And yeah, it's disappointing. Gold is trading south of $1,800. But again, if you're a retail investor and you're holding it as part of your portfolio, this is noise. If anything, I would add to the position at these levels. And if you're a trader, yeah, you've got to be a bit more nimble because the market is moving on sort of news bites on a daily basis.
You talked about cycles with me before. I'd like to revisit this topic one more time. How long does a typical commodity bull or bear cycle last, and how far are we into the current cycle?
Generally runs 7 to 10 years. I think we're probably less than 2 years into this cycle.
Okay. So we're still in the very early innings, is what you're saying.
I believe so. Now, again, take it off the rails, the whole economy collapses and we go into a major recession, depression, whatever you want to call it. No amount of stimulus is going to get us out of it. I think that scenario would have to be a virus type of related news event where the variants get out of control and we need to shut down the entire economy.
Yeah.
That to me would be the white swan where I would probably see the metals dropping significantly as people raise cash. I don't think that scenario is a high probability, but it is a possibility. So those are that is one scenario that I'd be watching closely. But assuming that scenario does not play out and the vaccine takes hold, and sometime mid to late summer we're back at what I would consider normal. I'm not even sure what that's going to look like, but normal. I just think the pent-up demand in the economy from the retail side and the amount of money sitting on the sidelines is massive. It's just hard for me to believe that that's not going to create an inflation spike.
Yeah. So in other news, the shares of Barrick held by Warren Buffett and Berkshire Hathaway were dumped a couple of days ago. Of course, the full picture is that he sold a lot of shares in a lot of things.
I'd be careful on the reporting there. If you read the news release, I mean, he acquired the position second quarter of last year, so almost at the bottom. If I remember the pricing, it was somewhere in the mid-teens that he bought Barrick. And his liquidation, although it ended in the fourth quarter of last year, started in the third quarter of last year, and he was getting, I would say on average, he probably got north of $28 a share for it. He got some off in the 30s, and then he got some off 22 to 25. Excuse me, if you read the filing. So this is old news. I mean, it's not like he went out yesterday and he sold his Barrick. His filing indicated this happened in third, fourth quarter of last year. So it's not relevant to today's market. For all we know, in the first quarter of this year, he's rebought the position. We won't know that until he does his filing after the first quarter at the end of March. So, Buffett has a tendency of being a very long-term investor when he's in, and it is true, he's always been negative gold, but he's not an idiot. And when he saw an opportunity early last year in the second quarter, with everybody spending money and trillions going into the economy in the US and globally, he saw this as an opportune time to buy gold, and he was right. And now he sees possibly the economy starting to recalibrate. He's maybe not that concerned about inflation until down the road a little bit, and he took his profits late last year when the vaccines were announced. I mean, he doesn't always hold a position for long term. Sometimes he sees an opportunity and he sells it. And if the filings are accurate, the way they were reported, he made himself 70-80% on his investment.
You're right.
That doesn't mean he's not going to re-enter the position if he thinks it makes sense.
You're right. Yeah, he did sell some positions a few months after he purchased the shares. Is that just a coincidence? I mean, he must have timed that very well, pretty much near the highs of gold prices last year.
Well, he probably saw gold run up to 2190, saw it run into resistance. It started to stall. Then better news came out. Yes, we have a vaccine, and he probably figured, look, I've got 50, 60, 80% in here. I'm going to take some off the table. Totally normal. That doesn't mean that he will not re-enter the gold market. It doesn't mean he might not have switched it in early January and bought silver, and we won't know that until the end of March. And again, but it'll be a story that's not even relevant anymore because it'll already be 3 months old.
So maybe he doesn't. Maybe it's not a gold play necessarily maybe he just likes Barrick or has liked it for a while. Maybe he just liked the company, because he could have bought the GLD ETF. He could have bought more direct ways of being positioned in gold or silver.
He could have, but again, I don't know how he does his trading, but when he trades blocks, and it might have been a bit more or less liquid trading it on the ETF, and maybe he went in. Again, if he went in early second quarter last year, remember the gold price dropped a couple of $100 before it ran up. So maybe people out there were nervous that gold was going to collapse, and they had a position in Barrick, and he stepped up and said, "I'll take it off your hands," and he bought a block. Again, you don't know the details, so it's difficult just to make a broad assumption. Well, he sold his Barrick, therefore the gold market is going down. I don't necessarily think there's any correlation in those two things.
I've spoken to several mining executives, and they all said that silver is likely to outperform gold this year. I wonder why. Do you have any idea as to why the miners are having this opinion, and do you share this opinion?
I think that silver has a two-edged sword. One, you have and continue to have serious shortages of small investment size bars in silver. So retail investors are still chasing the silver market, and so there is a significant demand function still going into the cash silver market. It's difficult to pick up inventory, and when you pick it up, even at premiums that I consider ridiculous, $4 to $5 on 100-ounce silver bars, anywhere from $8 to $15 on silver coins. I personally would rather not be in the market than pay those kind of premiums for physical product, but that's just me. But there, you have this continuous demand on the physical side of the market. You still have the mints that are in allocation mode. Still have logistics issues coming out of with the airlines. Got 40% capacity on the airlines. A lot of this metal flies in the cargo hold of commercial airliners, and you've got a 60% reduction in traffic there, so it's hard to find space. Logistics costs have gone up anywhere from 500% to 800%, depending on location. Some of the mines in Mexico are having trouble producing the silver and getting it moved. So that's the short-term issue. The more medium-term issue for silver is that there is an expectation that the economy is going to recover. And now you add to this equation of retail demand and physical demand for investment product. You add to that equation the demand that comes from industrial use. And especially with Biden being the president, and if he gets his Green Deal set, there's going to be much more demand for silver on an industrial basis. So you add that to the equation, and you can see that this sort of supply tightness in the silver market is likely to last for the foreseeable future. And as long as that continues, you're going to have this variation of price with silver outperforming gold. I mean, silver ratio to gold early last year was probably in about the 80 to 1 range, and now it's trading at 65 to 1 or better. So I see that continuing. And even with gold getting hammered, I mean, 2 weeks ago at 1850, now at 1780, silver is basically up in that same time window. Again, take the aberration that happened 2 weeks ago, but it's trading at the mid 27s. So there's obviously continuous demand and supply issues with silver, and I don't see that changing in the foreseeable future.
Okay. Well, Peter, thanks very much for your update. As always, great talk, and I'm happy to catch up with you again next week.
Okay, David, take care. Have a good weekend.
You too, Peter. And thank you for watching Kitco News. I'm David Lin.